Hello, 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 everyone. Welcome to Touching You Talk Show. This is Elder Sheila, and I have two very special guests with me today in the person of Shannon Murphy and Mr. Renix Graham. How are you today?
Doing great.
Fantastic.
Wonderful, wonderful. So I always ask my guests how long have we known each other. So let's start with Shannon.
Ooh, we go all the way back to Day Spring. I don't remember what year that I met you, Sheila. So I'm gonna say at least 10.
Uh-huh.
I'll say at least 10.
About 10. And then Renix.
A good 5 years. 5 years. Feel like 50 years, but 5 years. I'm only 42, talking about 50 years. No, but yeah, 5 years. 5 years.
Yeah, well, I am so happy to have both of you on. This is Insurance Awareness Month, and I just wanted to talk about it. It's Life Insurance Awareness Month. It's an annual campaign held each September to educate Americans about the importance of life insurance for financial security. The campaign was created and is coordinated by the nonprofit organization Life Happens. And don't we all know that life is truly lifing in 2025? How
Yes,
many of you
ma'am.
agree with that? So I
Mm-hmm.
want to ask those who are listening and those who are watching if you would go ahead and share the broadcast, if you would comment, if you would ask questions, we will be available to answer your questions today. And we will go ahead and jump in. So, Miss Shannon, please introduce yourself, your role as a financial services specialist. How long have you been in this industry?
I have been in the industry since 2012. I initially started out in the industry as an Aflac independent agent, selling supplemental products to small businesses that couldn't afford the traditional core medical, dental, and vision, and have expanded my years with Aflac for about 8, and then sought out some other opportunities that have come my way. And so, yeah, it's been a rewarding industry for me. I really have enjoyed helping people and also being available to answer any questions that they may have. So, thank you for this opportunity to be here tonight.
Absolutely. And Mr. Renix, tell me about you. How long have you been in uh, insurance specialist, a financial services
Yeah,
specialist?
yeah, yeah, yeah. First off, thank you, Sheila, for having me a part of your show. Glad to be a part with you and Shannon as well. And so, being in the financial service industry has been 10 years. This year marks 10 years working in the financial service industry. I've learned a lot. And before joining the company I'm with, Appreciation Financial, that we're a part of, I was working with World Financial Group, even Primerica, and just getting my feet wet, just seeing how to interact with people, and most importantly, it's opened my eyes to see the need of those who are in need of life insurance, those who are in need of just financial literacy and knowing how to manage their funds, manage their life. I was having a conversation today with a person, and one of the topics, and I know we'll get into the weeds of it, but we insure our cars, we insure our laptops, we insure everything else, but we do not insure our lives. And
Yeah.
something happens, it's like, hey, what do you have in place? We don't
Mm.
have anything else in place to protect our families. And so, but yeah, it's really opened my eyes to see just the overall need of those who need life insurance coverage, those who need those type of coverages. And yeah, and I love what I do. Been in it once again 10 years, just
Yeah.
educating the people, educating the educators, and that's how we do it. So yeah, love what I do.
Beautiful. Well, I have actually been in the industry a couple of years, 2 years. And so I'm the newbie, I'm the new kid on the block. But what I enjoy the most is helping people. Oftentimes, especially when we think about insurance in the past, we remember the insurance agent coming to your mom, your grandmother's house,
Mm.
collecting a premium every single month. They would come, they would eat dinner with you, they would pray with you. And I remember those days. I remember those days. And to know the industry now and how in the past the policies that they had available actually didn't always cover you as well. as you had hoped, you know. So we just want to change the trajectory of that as being financial services specialists, letting everyone know that we are your friend, we are your partner. We want to help you and not
Yes.
to hurt you. So, can one of you share like a personal story of a client or a testimony? Phoenix, can you share like a personal story or a client testimony?
Sure. Um, well, I've had a client. Unfortunately, the client passed away. It's bittersweet. The bitter is they passed, and family has to suffer the grief, the loss. The sweet is that they have something in place. And what's crazy about it was that the family did not know. And it was the whole communication dynamics was just not the best in the family. And so um, I was doing my annual reviews, just going through my database, my CRM, customer relations management. I came across his name, and so I see his contact information, called his phone. That disconnect sound, doo-doo-doo, you've reached a number that's been disconnected. I'm like, oh, okay. But then I said, okay, well, let me check his beneficiaries, which was his wife. Her contact was there. Called the wife. Hey, I was trying to get in contact with Mr. Steele. His name is Steele. Mr. Steele, oh, well, he passed away 2 months ago. I said, oh my. I said, and we're trying to figure out how we're going to take care of him and memorialize him. I said, well, I'm his life insurance agent. I didn't know that. She was just going crazy. Does he have anything? Is it still in force? Is it still in place? I said, yes, ma'am. And she just cried and cried, with tears of joy and relief
Yeah.
because they were under so much like pressure, so much financial,
Yes.
pressure. The weight was on her shoulders trying to figure out how we're going to pay the bills. His income stopped. So now how we're going to try and manage that.
Yeah.
So we're able to go through his information, and we was able to file a death claim to let them know what was going on. And from there, in a matter of, I would say, 10 business days, they were able to bless the family with the death benefit, $100,000 death benefit. It's something is in place. Something is always better than nothing. But I felt the relief, and that's what I love about this field is that we have a connection with our clients. We built that rapport with them. And it's
Yes.
like I feel their pain, I feel their pressure, I feel the stress, and in a way of sympathizing and empathizing with them. When I told her, I said, "Yeah, this is what he has," and she reached out to me a month later to say, "Sir, we wouldn't know what we would have done if you did not call me, as the primary beneficiary." So she was able to be blessed with the death benefit. They were able to uh, basically memorialize him. It was later on, but they were able to get all that stuff together, and it was just a huge relief. But that was definitely a good success story that I've had. That's the biggest thing in my career in 10 years. That was the biggest thing I was able to witness on my side.
I see we actually already have some questions, but before we answer the question from Rochelle, Shannon, I want you to talk about the reward of educating individuals about life insurance, letting everyone know that it's not just a death benefit, that it's a financial strategy, and you can use it in other ways. So, can you tell us about how rewarding that is for you to educate individuals on life insurance?
Yes. It's really rewarding, Sheila, because a lot of people are not insured. And so they don't really feel a need to be insured, which is a little irresponsible because at the end of the day, you need to be concerned about how is your family going to bury your body and take care of you after your demise. And so just to be able to go out and speak with individuals, whether it's a large group or on an individual one-on-one basis, and let them know that you're not only taking care of your funeral service, but if you have children, if you have a family, then this money will also be able to give your family some financial relief in your absence. And so I take it from that standpoint of educating them, that especially for men, because they really think, oh, I'm going to be here forever, and that's not true. No one is going to be here forever. So just being able to give them the thought, or the another way of looking at it is that you want to make sure that in your absence, that your family is still going to be able to pay the mortgage every month. They're still going to be able to put food on the table. And so when you take it from that perspective, it shifts things for them. And then they're able to see, well, this really is something that I need to do to be able to take care of my family. And so with life insurance, there are, of course, there's the death benefit, but then there's also an accelerated death benefit, that if you are diagnosed with some type of illness that could take your life for up to 2 years or less, then some policies will give you a certain amount to be able to use just for your living benefit while you're here. And then the remainder will be left for your family after your demise. But just being able to kind of educate people on the different types of policies. I am more of a whole policy as opposed to term life. And I'm sure that we're going to get into that a little bit later too. But I'm just a big proponent of whole life. But at this point, if you need term life, then let's just get you covered so that your family will be okay after you leave this world.
Absolutely. And one of my guests, Mr. Renix, he's having some technical difficulties, so he will be back on really, really soon. So let's go ahead and answer some of the questions.
Okay.
There's one question that says, if you have prepaid burial plan, do you still need life insurance?
Well, the pre-need is going to take care of your burial expenses, but there's still going to be expenses after you leave. It could be credit cards, it could be a mortgage, it could be a car loan. And so those things will not always be taken care of if the pre-need is all that you have. Some of the pre-needs that I've seen, they go for 5,000, maybe 10,000, but really it's just, and then you go in, from my experience, you go in and you pick what your casket will be, what type of programs you want. And so all of that is great for your burial, but you still need life insurance, in my opinion, in addition to that pre-needs policy.
Absolutely, because the pre-need is going it will only pay for your funeral home expenses. It won't pay for anything else. So like Shannon was saying, if there are any bills that need to be paid, and life insurance is a financial strategy as well.
Mhm.
The money can be left to your children so that they can have financial wealth. You can get an insurance policy for them that
Yes.
they can use financial strategy. They can take loans against it. They can actually pull the money out when they get older and just use it for whatever they want to use it for. They can
Mhm.
cash it in. So
Mhm.
life insurance is more than just the death benefit. But yes, if you have a burial plan, you do still need a life insurance plan so that your family can keep going. If you don't have that life insurance, then your family is stuck. And I do have a testimony of a young lady who, at the time, she was 35 and her husband was 35. And her husband suddenly passed away. They had just bought a house. They
Mhm.
both had just had bought new cars. They had two children. And she ended up being left with all of that. So she had to give up her house.
Yeah.
She had to let the car go back because she didn't have the financial means to take care of all of that, because it was two incomes that was
Yeah.
actually carrying the load. So yes, you definitely need the life insurance in addition to the burial plan.
Sheila, I want to just interject something real quick as well. I'm a real estate agent as well. And so when I see couples whether they're young, middle age, whatever the case is. I always want to encourage them to get mortgage protection insurance, that in the event of either one passing, that mortgage can be taken care of through the mortgage protection insurance. A lot of people don't know about it, and so that's another opportunity for me to educate on the real estate side of the importance of also having that mortgage protection as well.
All right, so we have a question, and I want you to kind of go into it. We really want to. We're going to. We had an outline, but since you're asking all these questions, we're just going to go ahead and go with your question. So, which insurance is better, term or permanent?
Permanent. I like to educate 20 years 20-year-old adults and up that the whole life is so much better, because you can get $100,000 maybe whole life policy at age 20 much cheaper than you can at age 50. And so with that, as long as you pay your premiums every month, that premium will not increase, but you still have that whole life policy there. And then with whole life, you're able to accumulate funds to where you can take maybe a loan out against your life insurance. And so I am just a big proponent of whole life. I understand that once you, let's say that someone had a policy that's a term life that's at 20, and it's a 20-year term policy. So at 40, you're not going to pay the exact same rate as you were at the age of 20 with a term life. And that's why I'm such a big proponent of whole life, because you do not have to worry about those premiums being adjusted or fluctuating because of your age.
And then when you talk about term policies, it's just that it's going to go for 15 years, it's going to go for 20 years, it's going to go for 30 years. And the challenge you may face is that once that term has expired, you take the risk of your premium increasing.
Yes.
You take that risk of it just tripling,
Mhm.
depending on what your age or depending on whatever you're going through at that time. Your premium could actually triple.
Yeah.
So it's better to go, if you can, with the whole life rather than the term.
Mhm.
So
And depending upon,
when you talk about it says, can you speak to the importance of insurance outside of the employer?
Yes. Pardon the technical issues, you all, out of my control, but I'm back. So the importance of having insurance outside of your employer is having your own is where you have control. You determine how much is valued for permanent life insurance. You can determine how much you need based on your insurability needs. There's fluctuations in it. I believe Shannon had mentioned about fluctuations. There's fluctuations on the cost of insurance you paying for the coverage. Being with an employer, it really varies. There's different types of employee or employer provided insurance. For employer provided insurance, you have the kind that will be considered declining life insurance. Declining life insurance was where your death benefit, let's say around about $100,000, right? And what happens is when you're no longer an employee, a part of the company, you work for Amazon, executive position, you get out of there and you decide to retire. What they don't tell you it is that the death benefit is declining, going from 100,000 down to 80,000, down to 60,000, down to 40,000 and lower. And those type of coverage, I mean, if something happens to you and the cost of insurance is, you're thinking 100,000, but you have a $100,000 death situation, but now you're down to $20,000. Well,
Mhm.
what happened to the 80,000? They didn't tell you that it's declining life insurance. And some of the insurances that they do provide that is not declining is quite hefty. It's pretty expensive. And there are some other type of employee provided or employer provided life insurance where
you decide to leave the company or decide to leave the school districts, what happens is you're no longer covered. You're no longer a liability to them. You're no longer their responsibility. So they say, okay, well, Mr. Graham is out, then we don't have to cover him no more. So something happens, he leaves, God forbid, gets hit by a car. He's out of there. And they're like, hey, the blood is not on our hands anymore, right? They have him and his family have to, figure it out. But having your own life insurance coverage outside of it, we call it your standalone independent life insurance coverage. You have that no matter where you go. You decide to change employers, or as an employee going from another company to another company, that goes with you everywhere you go. And you're not having to worry about losing the coverage, whether they cover you or not, whether they provide it for you or not. You having your own, you can take it with you everywhere you go.
That's good. So Shannon, you have your life and health insurance uh, credentials. So someone is asking, how does it work with pre-existing conditions?
Traditionally, most policies will do what they call the 12-month look back. And so, if you've been diagnosed with any type of terminal conditions or heart issues, it may be a deciding factor on whether that policy will be approved or not by the underwriter. And so it really just depends upon the insurance company and what their criteria is, but most of the time they do what they call a 12-month look back just to see. And I've had instances where individuals have said, oh no, haven't been diagnosed with anything. But people do not realize that there's a medical insurance bureau that is that exists. And so what they do is that they go back and they pull your MIB. And so all those medical records, if your doctor has indicated there's any type of diagnosis that you have not indicated on your application, it will be terminated and you will not be approved for the coverage. So I always tell people just be honest, because there is always a check and balance systems with the underwriter that they will pull those MIBs just to ensure that the information is accurate.
That's beautiful. All right, here's another question. It's from Tyrannical. I'm in my 20s, unmarried with no children. Do I really need life insurance? Isn't that for later in life? You absolutely need life insurance. And the reason why I say that is because number one, death does not have a age limit.
That's right.
So, just because you're 20, that doesn't mean you're going to live a long time. Number two, Shannon talked about how when you get the life insurance policy, especially when you're in your 20s, you have that opportunity to get what's called residual, like, give me the term for it, Renix, where you're getting, where you're actually accumulating cash.
Cash value, or
You're accumulating extra cash. If you get like an IUL policy, you can accumulate cash along with your death benefit. And if you do it in your 20s, my goodness, by the time you get to be my age,
Yeah.
60 something, then you will have accumulated some cash that you can actually withdraw.
Yeah.
You can take a loan out against it.
Mhm.
Your 20s is the absolute perfect time to get insurance. It's the perfect time to get life insurance.
Yep.
Any
Yep.
comments? Anybody else want to add anything to that?
Just to piggyback off everything what you said, starting young is the best time to start young. And in fact, I have two a niece and nephew who are, one is like 6 months, one is 2 years old, and I can tell you now it's $15 a month for a 2-year-old.
Mhm.
When this age doubles into his 20s, into his 30s, 40s, and 50s,
Yeah.
it's still going to be $15.
Mhm.
A lot of his friends would be like, "Oh, you paying how much? Oh, $15, man. They're asking for $300 a month. How did you get $15?" Well, because he started young, versus having to wait until it's too late. In addition to that, as well, I think the question was talking about I'm age 20, no children, you know, and really don't have maybe not much family, why would I need life insurance? Why would I need that? Well, let's not forget that life insurance is not only a death benefit, but remember, a living benefit. What if you become sick or ill, right? And you need to file a claim, right? And your medical benefit may not cover 100% of the cost, but you have something there in place to be able to, fill that gap. You have living benefits as well, just in case if you need access as an accelerated benefit rider to that as well. So, yeah. But life insurance is important. It's definitely important. Age is, like what you said, death is no respecter of person. It's no respecter. You ain't got to be in your 90s and 80s, the way to pass away. No, in your 20s, 10s, it's unfortunate, but it's no guarantee as far as how long it lives.
So Amani has said it's life insurance, generational wealth.
Mm-hmm.
Basically, what Renix was just talking about. Say, for instance, what if you're a grandparent, or if you have a child and you sign them up for life insurance? It's not just for when they die. You can actually use it as a financial strategy. And the younger you start them, just like Renix was saying, if you start them at 1 or 2, by the time they get to be 50, the money that they will have sitting there waiting on them, in addition to their death benefit will still be there. They'll be able to take a loan out against it. They'll be able to withdraw it. It's just so many things that you can do with this life insurance policy. It's not just a death benefit. So let's see. Here's a comment: life insurance to ensure you keep living. That is good, lady.
Legacy lives on.
Yeah.
Okay, so my GMA has outlived her term life, and she was paying for 30 years, almost quadruple the price. So there's a testimonial that talks about how when you have a term life policy, if you outlive that term, there's a possibility that your premium will increase. And when she say GMA, she means her grandmother.
Right.
Don't know. All right. So Rochelle is asking, should parents get life insurance for their children under 18? Absolutely.
Yes.
Absolutely. Absolutely. And, either one of us will be happy to give you an assessment to let you kind of see what that looks like. It's very important. If you do it early, like Sister Shannon and Mr. Renix was saying, that premium could be $15, $25. And, that's really affordable when you've got young children. But, of course, the older you get, the more it's going to be, right?
Mm-hmm.
And that's with anything.
And I know, Sheila, that in some cultures, it's considered taboo to put life insurance on your children. But again, you just never know what life will bring. And so no parent would ever want to bury their child. I understand that completely. But if something should happen, then you're not, trying to fish and get the appropriate funds together while you're grieving the loss of your child. You would already have something in place as well.
All right. So Rosalind is asking, can a 20-year-old remain a rider in parents' insurance for how long? So can a 20-year-old remain a rider in parents' insurance, and for how long?
Is it at 26 that they would have to obtain their own policy?
Different life insurance is totally different. Some of them could be forever. Some of them do have age differences. It just really depends on the situation there, based on like the coverage for a child like rider. That's why they call them child. Typically will go up to 18 years of age. Once you're there at 18 years of age, to say, okay, hey, it's time for you to go ahead and get your own, life insurance coverage. And typically what a rider is for a child rider, it's just a life insurance within the life insurance. So for example, say Elder Black, you say you have, 2 kids and they're young and say, okay, hey, something happens to me or something happens to them prematurely, their riders will be able to take care of you. And, or if something happens to you, vice versa. It's kind of like cross collateralization in this situation. But different life insurance is based on rider stipulations and rules. A lot of them are different. And for us, we represent multiple different types of life insurance companies. So, whenever we sit down with a client, we get their information to see what their wants and needs are. We'll point them in the right direction, see, which one will be, good life insurance coverage and the right rider, for them as well, to see how long they can keep them covered under them. So, yeah.
All right. So Lavonda is asking, so if you have a teenager 20s, should they get whole life? And we all say together, yes.
Yes.
Yes. Sí is in Spanish.
Immediately.
Say together, yes.
Yeah. I don't think they're ever going to hear a word no, on life insurance. Do I need life insurance? Yes.
Yes.
Yeah. Why not? Right. So, yeah.
So we basically wanted to come on. We wanted to break the myth that life insurance is not just a death benefit. It's not just for funeral expenses.
Mhm.
It's not just because I've heard people say, "Well, I'm not trying to make my family rich." That is not necessarily what it's for. Just to make your family rich, but it's there to take care of those expenses. It's there to help them out when you pass away. If you get like personal insurance, like Miss Lavonda was saying for her 20-year-old, again, if they invest in an insurance policy now at 20, by the time they get to be 55, 60, they will have accumulated cash value.
Yeah.
Like I say, that they can pull out, they can use it.
Mhm.
One strategy that my supervisor used, she got a life insurance policy for both of her children, right? And when it was time for them to go to college, they cashed the policy out. They actually took a loan against the policy and paid for their schooling. So
Mhm.
it's so many ways you can take advantage of life insurance. It's not just for when you die.
That's right. That's right.
All right. So when we're talking about building wealth and legacy, we talked about cash value accumulations, usually on a whole life and IUL as a savings retirement tool. Can you talk about the cash value accumulations, Renix?
Yeah, absolutely. The cash value is my favorite component in life insurance. Um, just after, of course, with the death benefit and everything that comes along with it, but putting into and say an IUL or even whole life, those are permanent life insurance coverages that allows you to put into your cash value. You're paying $200, $300 a month. Just as an example, a large greater portion of what you're putting away for yourself goes straight to the cash value. A smaller portion pays for the cost of insurance. So what happens is you're putting in 200 away, a small portion of the 200 goes to the cash. But then the cost of insurance, greater portion goes to the cash value. That continues to build, continues to accumulate. Now, for tax purposes, the good thing in a cash value is whenever you're in need of money or need to take funds out, it's considered tax free. Now, I'm gonna be careful with the way I will phrase that. If you need to get money out of your cash value, there's two ways of how you can get access to it. Now, if you try to get access to it by way of withdrawal, you can withdraw it. However, you will be taxed on the gains, which is the interest that you have, accumulated in your cash value, not the principal, but on the gains. For example, hey, I need to do a withdrawal of $5,000. You're not going to get the full 5,000. You may get 4,600, 4,500. It's all dependent on your tax status or not. But you're taxed on the interest, not on the principal. Now, in this situation, if you needed a loan and you need 5,000, you get the full $5,000 out. That's considered tax free with the cash value. Now, my most favorite part is this. If I get $5,000 as a loan, because you know what happens when you borrow that money, you got to do what with that money? You got to pay it back.
Yeah.
So in this situation, if you're in a financial bind, you're unable to pay the $5,000 back, no problem. How's the company going to get their money back? Well, what they'll do is they'll pitch that $5,000 from your death benefit. So your $100,000 that you have goes down to $95,000.
Yes.
Okay, you don't lose your life insurance coverage. You're not penalized. They don't ding you for it. Get a letter in the mail be like, oh, you're not, you can never get another loan again. You can get as many loans as you want. It's all contingent upon the amount that you have in your cash value.
Right.
So that's what I really love about the cash value is tax free. It's post tax money, because majority of your life insurance, when it's being funded, is being paid through your bank. Money's coming from your bank, drafted to your life insurance, going into the cost of insurance and your cash value. That money in your bank is post tax dollars. You already paid your taxes already, right? So when you take money out of your cash value, you don't have to pay taxes twice because it's already knocked out. So I think we talked about term earlier, but think of it this way. Term is like renting an apartment or leasing an apartment, right? You sign a 1-year lease, right? And you're paying $100 on this leasing term life insurance coverage, and you're just only paying for a roof above your head, or just paying for the coverage. If I need, I say, I put $1,200 into my term, I need half of that money back because I'm in a financial bind. You don't get nothing back in a term. In an IUL or a whole life, think of it as owning a house. You build equity. You need money out of it, you can get money out of it. And you have that for life. Elder Black, you mentioned about having to renew. I think Shannon as well, Sister Murphy, you having to renew in a term, and what's going to happen to the cost of insurance? It goes up, keep going up. The older we get, the cost of insurance ends up going up. But having an actual permanent policy, like an IUL or like a whole life policy, having that cash value is where you build the equity, you get the interest and stuff like that. And you're able to get your car if you needed it, or get a new, new clothes, whatever the case may be. It's for any intended purposes in terms of you getting access to your cash value. So that's just the magic of having a cash value life insurance. One last thing, I know I'm saying a lot, but I'm passionate about life insurance, by the way. But with cash value, I always tell all of my clients, when you're putting money away and you're serious about it, you can't put money, $300 can't put money into a cash value life insurance policy and expect to get the money back the next month. It don't work like that. Because if that's the case, put your money in the bank. If you need access to your money now, no, it takes time. You have to build upon that. And then after 8 years, 10 years down the road, 11 years down the road, you look at your fat accumulated cash value, say, hey, I'm glad I waited, right? Because you've been putting that money away and allowed to build in the cash value. So that's the benefit of having a cash value life insurance.
Okay, we have another question here. It says, when your parent gets to be a certain age and you're unsure if they have insurance, should a person just look into burial as opposed to whole if they are nearing 80s?
Yes.
Shannon, she's shaking your head.
Yes, absolutely. I'm kind of currently in a situation like that. And so what I've just decided to do is obtain a burial policy so that at least I know that those expenses can be taken care of. Because at 80 years old for a whole life, astronomical is what you would pay every month. And so definitely a burial policy, a pre-needs policy, would definitely make sure that those burial needs are taken care of.
That's good. That's good. So we didn't follow our outline, but what other information can we communicate to our audience today, Mr. Renix?
Don't wait till it's too late. Don't wait till it's too late. Like we mentioned earlier, the sooner you get it, the better it will be. And here's the thing. Going back to term, and I know we talked about the dichotomy of term and even permanent life insurance. Term is where all else fails if you don't have much money to your name and it's really, really tight. by all means, start with a term. I did. I ain't gonna lie to you. I didn't have the money to afford a permanent policy, but I understood that the older I get, the cost of insurance is gonna go up, and at the same time, me not having no life insurance at all, that is really what we call a selfish position that I put myself in. Something happens to me, heaven forbid, tomorrow's not promised. I slip away. What have I left my family? Nothing, right? So don't wait till it's too late. Have something in place. That way you're able to, have something that covers. And once again, if it's term, start with that term. Here's the benefit of having a term. Having a term policy, you got death benefit, of course. You have living benefit. And third, you have what's called the conversion privilege, which means that you're able to convert from a term policy to a permanent policy.
Yeah.
I always tell my clients this as well. They feel embarrassed, like, oh man, I love that perm, but I know that permanent, we call it perm, but the permanent sounds good, but I just don't have the funds whatsoever. Can I start with a term? Who's going to say no? Of course, yes. Something is better than not having anything at all. It's better to have it, to not need it, than to need it and not have it at all. So
that's true.
That's my 2 cents.
That's true. I have 3 things. Please list beneficiaries on your policy. Please list beneficiaries that you know that are going to be responsible. Please do not list beneficiaries under the age of 18. They must be over the age of 18, because what happens is that if they're under the age of 18, it just kind of sits in a trust until they do turn 18. So you just want to make sure that those individuals are over the age of 18. 20 plus year olds, please get a whole life policy for yourself. And there was 3 things that I had. Well, I guess that is 3.
Okay, I do have another question. It says, I know you talked about pre-existing conditions, but would a child with a disability be less likely to be covered, or is it a case-by-case situation? It's definitely case-by-case.
I want to say case by case too.
Definitely case-by-case.
Mm-hmm.
Yeah. So I wanted to give everyone that's listening live, everyone that's listening on demand, I want to give you a homework assignment. I want you to go back and see what you have. All right.
Mm-hmm.
I want you to make sure that the policy that you have is not one that has a benefit that decreases after a certain age.
Mm-hmm.
There is a situation where I know of a young lady. She remembered the insurance person coming to grandpa's house every single month collecting the money. Well, when grandpa passed away, the benefit had decreased all the way down to $500. And where can you have a funeral for $500?
Yeah.
This happened in 2024. So where can you find? You can't find a funeral home that's going to do anything for $500. So I want you to make sure, go back, check your policy, check the policies of your elderly family members to make sure that they're covered. Make sure that they have insurance. Make sure that you know what your family has.
Yeah.
I had interviewed a funeral home director, and he said oftentimes the family members don't know, but they think the person have insurance and then they don't. Or they think the person have insurance and they've already cashed out. They've taken a loan against it and there isn't actually any money. They've taken so much of a loan that they're
drained it out.
Money. Yeah, they drained it out.
Yeah.
So I want you to go back, check yourself personally, make sure that what you have is not decreasing. Make sure that if you have coverage through your company that you work for right now, consider getting your own policy, something that is going to last, something that is going to follow you. If you decide to leave that company, then you will still have your insurance. Go back, like I say, and check your elderly, making sure that they have something in place that when they pass away, that the family won't be at the wake with a offering plate. Renick showed me a text of someone, and on top of their program, it had the big words canceled. And I couldn't believe that this was real. And it
Oh.
really hurts my feelings just thinking about it. They canceled
Yeah.
this person's service because the family couldn't come up with the required money.
And most funeral homes, they didn't mean to jump in, they're straight up about it, about their money. There's like, hey, even when the service I showed you, it was scheduled, date, time, church, everything, right? And they didn't care. Maybe like, we're not doing it. We're not bringing the body. We're not going to memorialize. We ain't going to have the service. At the third, they don't care. They're upfront about their money, flat out. Yeah, but it is hurtful seeing the word canceled because it's really doing a service to the deceased.
Right. And then change your thinking
Yeah.
with insurance, life insurance being just a death benefit. There's more to it than that. And we would love to give you even more information. Just let us know. We'll be glad to just do a personal assessment of you and what you have, making sure that you have enough to cover your family. Did we have any other questions before we let you go?
I had one more point. I remember what my third point is. Communicate to your family members where your policy is, what your policy number is, so that they're not scrambling, looking in all these boxes and all these drawers and trunks, and there's nothing there. So just communicate to your family where your policy is. So in the event that anything takes place, they're just able to handle the affairs a whole lot better.
Absolutely. All right. Well, I appreciate all of those who asked questions. They had some good questions tonight, right?
Yeah.
They got us pretty busy. We
Yeah,
didn't
my
even
brain
get to go with our, we didn't even get to go with our outlines because she had so many questions, but that is great. We appreciate all of you. We would love to be able to help you figure out and make sure that you have everything that you need in the event of an emergency, or with your children and your grandchildren, just setting them up for a financial freedom that they never would have dreamed of otherwise. So thank you all for coming. This has been Touching You Talk Show. Have a great day, everyone.